Again, my bad. I'm sorry. I didn't turn the mic on. One more time. Hello, good afternoon, and welcome to our daily live stream. Brought to you by DCFX Asia, and I'm yours truly, Abe Layman, coming to you live from Central Java, Indonesia. Okay, how you guys doing? Good, I hope. Today is Monday, the 12th of June, the first day of the week, and this is going to be a busy week because three central banks are going to issue their interest rates. Well, it can be a very interesting thing to do, to see. And what we're going to do is we're going to see the economic calendar. Then we can when is coming what. Alright, this is the calendar. So today the Australian market is closed. The Japanese yen this morning had a PPI year on year. The number issued was 5.1% against a forecasted number of 5.6%. So it is slightly lower. That would mean that the yen might get weaker. So, well, coming back to the three central banks, they are going to issue the interest rates on Thursday. We're gonna have Thursday midnight my time, so we're gonna do it on Wednesday. It's the FOMC economic projections and FOMC statement. Once they issue that, then they will come out with the Fed funds rate or federal funds rate or the US interest rates. Okay, but we can roughly gauge that it is going to be a stall increment, meaning Jerome Powell and his merry men may have decided to retain the status quo, meaning it will stay, they will not increase any more rates, rather they hold it, they stall it, and see what's the market doing from there. Then maybe they will start cutting down on the interest rates, right? So on Thursday we have the Federal Reserve issuing the Fed funds rate, and on the same day we're gonna have the BOJ, Bank of Japan, policy rate. Plus, prior to that, the ECB, European Central Bank, will also issue the interest rate, and that is coming on Thursday, right? So we'll discuss that on the day itself. As for today, what we're gonna do is we're gonna take a look at what's happening last week to see what can be expected coming up. As I said, the Federal Reserve, we're gonna have the inflation report, CPI, Consumer Purchasing Index. Then that is the measure of the inflation. Will the inflation be a bigger number or a small number? We'll find out later. But as of today, as of now, last Monday, the ISM services for the US posted a number of 50.3 against a forecasted of 52.6, and that gave the US dollar a slight weakening. And the factory orders month dropped from 0.6% to 0.4% against a forecasted number of 0.8. So another setback for the dollar came last Monday. That on Tuesday, excuse me, the IBD TIPP economic optimism shows a slightly pessimistic opinion because the forecasted number was 45.2, the actual number is 41.7. So it's not optimism, but a little pessimism. Then on Wednesday, US crude oil inventory is not a big issue, but the trade balance was good. Uh, it has less negative value because the forecasted number was minus 75.8 B. The actual number was minus 74.6 B. That helped the dollar a bit. Then on Thursday, it was a scary moment because the BLS, or Bureau of Labor Statistics, issued the weekly unemployment claims from a forecasted amount of 236K. The actual unemployment claims came out to be 261K. So the job reports, the unemployment claims is much higher by about 50K against the expected number. So that sent the bulls away, but the bears came dancing to the dollar index on Thursday. Then on Friday, it was a feast day because it's data of the US dollar, right? Now let's take a look at what had happened for the Eurozone last week. The services PMI for Italy, Germany, and Spain. Only Spain maintained its numbers, whereas Italian got a negative number of 54 against a forecasted number of 57. German had a number of 57.2 against a forecasted number of 57.8. And the final services PMI for the Eurozone came out to be 55.1, lower than the forecast of 55.9. Okay. Uh, then later that evening on Monday, Christine Lagarde spoke in a symposium, and that somehow gives some clues to where ECB is going with the interest rates. I suspect that it's going to be the same, right? And then there's also on the retail sales for the Eurozone had a negative number of zero increment from a forecasted number of 0.2%. That became a dent in the euro's power. Next, on Wednesday, the French trade balance had a negative number of minus 9.7 B against a forecasted number of minus 7.7 B. And then on Thursday, the employment numbers for the Eurozone remains unchanged Q on Q at 0.6%. But a revised GDP Q on Q for the Eurozone is at minus 0.1%. It somehow shrank. Of course, we must also understand that the part of the equation for this revised GDP is because the GDP of Germany is the industrial giant of the European Union, has got a shrinking GDP, so that affected the Eurozone as well. So it was the forecast number for the revised GDP Q on Q was 0.0%, but the actual number came out to be minus 0.1%. So Friday, mostly on the euro. So the next central bank that's going to issue the official rate will be Bank of Japan. Well, Bank of Japan, they are pretty happy with how the economy is doing. So I doubt if there are any changes to the interest rates or to any of their current fiscal policy. But we have to know, we'll find out only on Thursday. So let's take a look at what happened last week for the Japanese yen. The average cash earnings year on year came out on Tuesday. The average cash earnings was forecasted at 5.2%, but the actual number came out to 3.7%. Next is the household spending. It was forecasted at minus 2.2%, but since there was a drop in cash earnings, so household spending also dropped. You don't earn so much, so you cannot spend so much. And that the number came out to minus 4.4%. That was on Tuesday. Then on Wednesday, leading indicators of the Japanese economy is forecasted to show 1.9%, but the actual number, at 98.3%, the actual number only came out to 97.6%. That's why it became negative. It's supposed to be positive, but well, it wasn't that good for the Japanese yen. Next comes the good news on Thursday. The bank lending year on year grew from 3.2% to 3.4%, way higher than the forecasted number of 3.1%. Then the current account for the Japanese economy stands at 1.9 trillion, which is way above the forecasted number of 1.39 trillion. That sounds good. That's good news for the Japanese yen. Next is the GDP Q on Q. The forecast was 0.5, actual number is 0.7. That's another bullish sign for the Japanese yen. Next is the economy watches sentiment. Very interesting. Economy watchers forecast that the Japanese economy is about 55.1, but the actual number is 55.0. Okay lah, about that, near there. Then that's it. Nah, the money supply or money stock year for the Japan stood at 7, in line with the forecasted number of 2.7%. So there you go. If the current global economic condition is economies, some doing pretty okay, and some just moving on along. It is most likely that the Federal Reserve may want to stall the rate hike. Let's take a look at the heat map of the economies that we are discussing. Hang on. Let's look at the economic numbers, the actual economic numbers, yeah? Okay, here we go. Right. United States, the GDP stands at 23.3 trillion. The current interest rate is running at 5.25%. The inflation rate is 4.9%. Excuse me. The jobless rate is at 3.7%, coming from a population of 334 million people. Okay, that is for the US. What's interesting to note is the interest rate of the US is 5.25%, much higher than the inflation rate of 4.9%. Bravo for Jerome Powell and his merry men in the Federal Reserve. They managed to bring down the inflation numbers from 10 last year. Early this year it was about 9, 8. Finally, currently it's standing at 4.9%. We're going to see some numbers tomorrow based on the CPI, which is also an inflation report. Then, based on that, will it be higher or lower? Then on Thursday midnight or Wednesday midnight, we'll know whether the interest rate will remain at 5.25 or less. So next, from the States we go to the Euro area, because European Union and the Eurozone, it's part of it. European Union is part of the Eurozone, because not all the members in the Eurozone, not all countries in the Eurozone are part of the European Union. But basically they all have one common currency, which is the euro, right? So that is why it's no longer called the European Union. It is known as the Euro area, because even though they are not members of the EU, they still use the same currency, which is the euro. And they do sometimes get help from the ECB, European Central Bank, for their fiscal policies. So, based on that, Euro area has a GDP of $14.5 trillion. The current interest rate is running at 3.75% against an inflation rate of 6.1% and a pretty high jobless rate of 6.5% from a population of 342.89 million people. Right. So Euro area is a unique situation where you have non-member using the same currency, and usually these are the former Soviet republics who went independent and wants to be part of the European Union, but the European Union not admitting them all immediately. Politics. So geopolitics in the euro area is still happening. They're still negotiating who gets what are the pros and cons of being part of the EU and all that. Let them do it. And because of that, the euro and the European Union as a whole, the euro area, gets slightly weakened because the former Soviet republics economically are not strong, right? Because they were the children of the Soviet Union. When the Soviet Union disbanded, they were left on their own, right? So, but because geographically they are within the European euro area in Europe, the European continent, they want to be part of the EU. EU, with its members, do not welcome them openly, but they want to see the costs and benefits in that part of the equation. But the central bank, the European Central Bank president, Ms. Christine Lagarde, a very experienced banker, and she's pretty good in macroeconomic policies. She has managed to stabilize the euro from diving into the doldrums again, which happened years past, but after she took over, things got better. So, and if you look at the interest rate at 3.75% against an inflation number of 6.1%, that's pretty high, right? So there's some work to be done for the ECB. We just see what kind of policies they have. Next, Japan is unique. It is the only country with a negative interest rate of minus 0.1%. So in other words, if you deposit your money in the bank, you pay a service charge. You don't get interest. Their inflation number for Japan is 3.5%. The jobless rate is among the lowest in the world at 2.6%. From a population of 124.95 million people, with the annual GDP standing at 4.9 trillion. Okay, so BOJ has got a new chairman, Mr. Ueda-san. So Ueda-san are pretty comfortable with how the Japanese economy is doing. So the analysts have the opinion that he may not want to rock the boat. He will just continue the policy because it is working. Because the saying goes, if it ain't, don't fix it if it ain't broken. So let it run. Just maintain, watch, and let it roll. So we don't expect much surprises coming from BOJ later in the week. Neither from the ECB. But what's going to be interesting is the Fed funds rate, because FOMC has got mixed numbers, because The job numbers last Thursday was little scary because the unemployment claims shot up very high when they were very comfortable that they have enough jobs for the people. But the problem is the jobs, to fill in the jobs, the applicant needs certain qualifications, but the unemployed do not have that qualifications. That's why the jobs are not being filled. So they cannot get a job, they become unemployed, and they file for unemployment claim. And the problem also, the BLS has been known to do a lot of window dressing. So uh, that makes the numbers to be uh, not reliable. But then again, Federal Reserve, they have their other indicators to work on, to dive into, so they will decide. And from the CPI, maybe they will come up with some other policies. But the according to the market sentiment, it's like it's going to be a status quo thing, meaning they will leave it as it is, and maybe Jerome Powell will come out with some other policies, right? So these are the fundamental side of what's happening to the three central banks: the Federal Reserve, the European Central Bank (ECB), and the Bank of Japan. So these three guys, or these three banks, are going to issue the interest rates coming Wednesday and Thursday. Okay, so that is the fundamental side of things. Let's take a look at the technical side of things. I want to share with you. One moment, please. I'm looking for my. All right, now the dollar index. Like it or not, the US dollar is still the base currency for global trade. And what we are doing, even if you trade gold, gold is priced against the US dollar. You trade crypto, Bitcoin, Ethereum is also priced against the US dollar. All the other currencies are also priced against the US dollar. So, like it or not, it is still the base currency. And like it or not, we have to analyze what the index is doing. Okay, right. So today's Monday. It opened above 103.296. It tested a high of 103,686, and you can see that the trend ribbon, my bad, the momentum line has crossed the 15 BB midband, now touching the 20 BB midband, and that is where the day high is. This is an indication that the bulls dare not to go further. Okay, for today. And the trend ribbon is telling us that it is going sideways, it's flat, but you can see the distance between the 75 MA, 100 MA, and the 125, the gaps are getting smaller, so it is being compressed, an indication that the bulls might want to come back. But the momentum is telling us, based on this daily chart, that it's beginning to start a bearish momentum. Confusing, isn't it? Now let's take a look at a smaller time frame at H4. Okay, this is the H4 chart of the dollar index, and according to the H4 chart, the dollar index is traveling in a downtrend or a bearish channel. See, this is the trend line, the support trend line. This is the resistance trend line, and prices at the moment are trading below the trend ribbon and below the MA 125. Okay, right. it is being supported by a bullish weekly channel support here. So just about this candle currently will switch to a new candle in about half an hour, because for my time the H4 candle um, changes at every 1 o'clock, 5 o'clock, and 9 o'clock. Your time is 2 o'clock, 6 o'clock, and 10 o'clock. Okay, so in about half an hour, this candle will stop and a new candle will appear. If the new candle appears below the channel, then we can expect it to go sliding further down. If it opens above the channel, there is a possibility that the bulls might want to push to MA 125. But if you look at the momentum line is not crossing the midband at all. It is moving in tandem, meaning the momentum is still bearish, even though there was a counter trend and excuse me, and there is a hammer below the bottom band. This looks good for a reversal, but this bullish reversal has been confirmed or has been done when it reaches the midband of the 20 BB. That's how I read my charts. Okay, so from H4, let's take a look at H1. Right. H1 telling us that it is currently being consolidation. So the dollar index is currently consolidating based on the H1 chart. See, this is the current candle. This will change in about half an hour, and this candle is below the BB20 bottom band. It is being supported by the weekly channel, and then there is a daily Fibo at 103.292, which was Friday's low. It got tested once. Currently it's not being tested. It's not there yet to be tested. So, but when prices go below the bottom band, there is a possibility for a reversal. And as you can see, there are two Fibos. This is the daily Fibo of AB 103. This is the weekly Fibo, also AB 103, meaning 103,252 is last week's low, but Friday's low stands at 103.297. Okay, so there you are. How bad will is it really that weak? Not very clear. It's about to turn, but is it that strong? Also not very clear. Let's take a look at M15. M15 is telling us that the bears are here already. Why do I say that? Because you can see the trend reflip and the trend ribbon is about to open up. So the bears are dancing in the market, and this will eventually push the dollar down. Okay, so there you are. Dollar index is getting weak. They might go lower because today not much not much news or data coming out. So it's going to be a technical play. Come tomorrow, Wednesday, the rocking and rolling will happen during the New York opening hours. Then there will be an interesting thing to do. And when the Fed funds rate is issued, then after that the ECB rates are issued, it will make the volatility of the markets to be exciting. Okay, right. That's it. We are done with the dollar index. We have covered the fundamental side of things, and we have covered the technical side of things. And now it's time to say hello to our audience and answer some requests and questions. Let me just put this back in place. Excuse me. Wow. Smith JT. Hello. Hey Smith. How you doing back? Welcome back. New. Hello, New. Good afternoon, Tabi. Hello, people. Good to see you. Good to see you, New. Come back. Well, welcome back. Welcome back, everybody. Dear sir, what do you expect for USD yen for the next hours? Man, I'm sorry, I can't read your name, but man, I can't read Arabic that well. Anyway, so anyway, sir, you want to know what's happening to the yen? I'll show you later. One more. Gold, Smith JT, you want to know gold? Okay, Risaya, hi. Hi, Risaya, welcome back. Good to have you back. You want to know Forex? Okay. Rosmina Stefan, woohoo, yoo-hoo. Rosmina Stefan, welcome back. Welcome. I think the first time you joining us, and thank you for your comment. Adrian Stiglitz. Hey, Adrian, how you doing? What is your opinion on gold and US oil today? Okay, so we have plenty of gold traders, and hang on, let me take a look. We'll start with the yen first, all right? Because the yen, first question. Okay, let's take a look at the yen. Hang on. I think I will need to use a different terminal, right? So, hang on. Let me just shift terminal. To take a look at yen. Yen seems to be strengthened actually. Okay, let's take a look. See, when the dollar is in front and the currency is at the back, like USD, JPY, the dollar yen, if it goes up, meaning the dollar is strong. If it comes down, meaning the yen is strong, right? So, yen got weakened last month, and then the trend ribbon switch. Okay, the third week of last month it switched. It's now going on a bullish trend based on the trend ribbon, but what we are seeing actually is a pullback or a retracement, and this retracement is a healthy retracement, meaning the dollar yen has a potential of going up again. Okay, but if we take this as a bullish flag, it can be a scary thing. Why? Because this bullish flag may want to have a target at around here, 148,332. Okay, the dollar yen, this pair is looking bullish, but is currently running on a pullback, and this pullback may want to go as low as 138,079. That's the first support. The next support will be at 137,196, at least for this week. Okay, so for today we take a look at a smaller time frame. Let's go to H4. Okay, the dollar yen is bullish, meaning yen is getting weaker, and currently it is being supported by the MA75 with the monthly FIBO at 139,162. I would say the final support will be second last support will be here, where the MA 100 and the bottom band of the 15 BB is, and that is at 138.939. Finally, the last support available is at 138.615. That is on the downside, the support, with resistance waiting to be tested at 140,149, and finally at 140,901. I think that's not happening today. H4 is a bit too long. Okay, let's take a look at H1. H1, is telling us it is still within a consolidation zone. So will the bulls come back to the dollar yen? Maybe. All right. Currently, see the support is at MA1. At A5 at 139.162, and this may form a tweezer bottom, so we can expect this to rebound. Okay. The support, the nearest support will be at 139.013. Okay, right. And looking at the momentum line is saying that the bearish momentum is here. The trend ribbon is telling us that it is consolidation with slight bearishness based on H1. Now, take a look at M15, see if we can see a different situation. Okay, when we look at the daily chart, longer time frame, it is bullish. But when we look at the smaller time frame, when we look at the intraday charts, we are looking at a bearish dollar yen, meaning the dollar index is weakening, and based on the effect of the unemployment claims, traders are considering that factor when it comes to trading the yen, because the dollar got weakened with the large number of unemployment claims. The spillover is still today. Maybe possibility that they want to drive the dollar down before pushing it up when the Fed funds rate appear or when the inflation report appears. So, and looking at the moment, during the opening of Dubai, then the opening of London, the dollar yen suffered a drop of 437 points. It might want to make a pullback to where the trend ribbon is, because the trend ribbon is telling me that it is going to flip, and the momentum line crosses the 15 BB, then the 20 BB mid bands, and that indicates that the bearish momentum is in the market. So it makes sense that I'm bearish for intraday on the dollar yen. We can expect these prices to go lower. This is the resistance level in about 19:07 p.m. Now it's 4 p.m. In about 2.5 hours time, when prices of the dollar yen is around 139 and below, we can expect this to go down lower to as low as 139, 138.903. So intraday, the dollar yen is bearish. Then I have given you the support and resistance. You plan your trade, then you trade your plan. All right, sir. I hope it is useful. We are done with the yen. What's next? Gold. Yes, of course. Let's take a look at gold before we take a look at oil. Okay. Gold. The golden bulls are pretty lazy. See, on Thursday, they came. Baby bull, mama bull, papa bull came to the market, drive gold up. Friday, papa bull got tired, mama bull also go to sleep, left baby bull, cannot push further. Today, only baby bulls in the market. Why? Because the bogeyman is still there to haunt the bullish drive. This bogeyman is the yearly Fibo at 1962.80. Right? So, we thought on Friday that the bogeyman has been passed. But actually, the bogeyman came back and tell the bulls to go away. So the bulls got scared of the bogeyman. They cannot drive the gold prices up, and now it's going sideways. That's on the daily chart. Let's take a look at the H4 chart of gold, right? Here we are. Okay, current candle got resisted by the monthly channel pretty hard because it has been in that zone for the past 3.5 hours. 3 hours and 45 minutes. We got 15 minutes more before this candle changes, and it can be a good support. See, this is the bogeyman I'm referring to at 1962.80. So if you want to buy, wait. After we are done with the M15, then you decide what you want to do. Okay, let me just explain to you that we are looking at a bullish momentum. Why? Because see the MA line, MA10. This is the momentum line. It has crossed the mid-band of 15 and 20 pp. Okay, and now the mid-band of 15 and 20 are going opposite direction, and the momentum line is running above the 15 pp. That is a bullish momentum. Okay, so we'll have to wait the next hour to tell. In order to see the hour, we take a look at H1. H1 is telling us that the bulls are taking a breather. Why? Because bulls have the price has tested the top band of 15 pp plus a weekly channel. It forms a resistance, but there is a possibility of it sliding further up. And you can see the momentum based on the H1 chart. The momentum line has crosses both the 15 pp and the 20 pp, so the bullish momentum is in the market. If you want to buy, I suggest you buy around the bogeyman at 1962.80 because this is going to be a tough support. When this fails, you can wait until it comes down to 1960 because I expect the trend ribbon to move here, say by 9 p.m. Possible. But this is coming at 7 p.m. my time, 8 p.m. your time. This is a weekly channel cross with the bogeyman. This may be a tough support and may be a good chance for you to buy if you want to go long on gold, because the momentum of gold is bullish. H1 trend ribbon also shows that it has flipped and it is about to go bullish. Okay, let's take a look at M15. All right, M15 is confirming that the bulls are in the market, and the unique thing about the golden bulls is if they want to go, they take no prisoners. You know, it's like hit on, charge, this kind of thing, right? So, and currently it is being supported by the 50% retracement mark of last Friday's high low. It may slide one more time for the next candle to have this channel as a support, and this candle just started, so you gotta wait next hour. If the next hour prices are still within that range, then it goes to this support at 1963. That is a good support to go long on gold. Your targets will be first one around here, 1968. Next one, 1971, 1972, 60. Today is technical play, so because there's not much data, those are your support and resistance for gold. Okay? I hope it has been useful. Let's just shift this. And usually Mondays, the the volatility on Monday is not that fantastic like Wednesday, Thursday, or Fridays, right? It's quite relaxed on Monday, so you want to take a break or break, take a break on Monday. You want somebody might ask for oil. Let's take a look at oil. Where are you, oil? Okay. So let's start with the West Texas Intermediate. It got hammered this morning, and now it's trying to do a reversal, and this may look like a strong reversal. So when New York opens, you can expect oil to move up. Currently it's running at 68,572, and what we are seeing is a dragonfly forming. If it stays within this price for the next 12 minutes, it becomes a dragonfly or a hammer, and it is a bullish reversal signal, then we can expect oil to move up. It's good, this price is good to enter, to go long on oil. Your stop loss level will be around 66.91 or 66.90. That is if you are generous. If I enter oil, my stop loss will be the low of this current candle, and there is a potential for oil to do a reversal. That is based on a weekly chart. For the WTI, let's see the daily chart. It is a scary thing to buy actually if you want to go on oil. Why? Because the trend is showing bearish. The momentum is also showing bearish momentum, even though potential for a reversal. But when the momentum and the trend ribbon is showing bearishness, it could be a simple pullback on the H4 chart. So if you want to trade oil, I suggest go short on oil. Go short only when it reaches around this area. This is the low of last year at 70.251, and this can occur in about tomorrow. Today it might just pull back, possible, but how good it is, oil is getting weak. Okay, look at the hourly chart. You have a resistance at 71.11. This is going to be the bogeyman at 70.29. So you want to sell, you can sell where the bogeyman is at 70.3 or 70.2. You want to go for bonus, maybe you can wait until it reaches 71, but I doubt. So my view on WTI based on H1, it is a bearish market, but it is at the bottom, so better to wait for it to come back if you want to join the bandwagon. If you want to buy, I don't advise because it is trending down. Don't buck the trend. Okay, that's WTI for you. Next is Brent. Same thing. Brent and WTI have similar patterns. Of course, similar levels. Brent is slightly higher than the Western Texas or WTI. Let's take a look at H1. Okay, so the pullback. Okay, this is the bogeyman for Brent, which is at 75.36. Right? You want to, or it might simply test up to here at 74.6. Well, so those are your resistance levels and the support levels. Oil, will it go lower? Possible for Brent to go up to down to 71.29 or 71.3. Looks weak. Brent is weak. Let's take a look at the daily chart. Correct? Yes. It is consolidation because excuse me. The low for Brent last month is at 71,346. So prices might want to test there, but before it goes down, it must, the bears have to be fat to make it fat. So when it slide faster and further. so to speak. So Brent is bearish. All right, there you go. Brent and WTI, oil traders. My summary is oil is bearish, but wait for its pullback if you want to short the market. Okay. Next, Rosmina Stephen, look at game. Okay, yeah, it can look like a game. I like colors. Right? I'm young at heart, so I feel good when I see a lot of colors. Sigma me, I don't understand what you're trying to say, Rosmina. But anyway, thanks for the comment. Aurel Pan. Hey Aurel, how you doing? Welcome back. You selling at 1962? Well done, my friend. Go right. Go Walker. Hey, Go Walker. How you doing? Welcome back. Hug. Sell. I guess. Wait. Gold. Well, let's go back to gold. See what's happening. You wanna sell? If you look at the H4, it is showing bearishness, right? But if you look at H1, yeah, possible for it to come down. You wanna sell it? You have a sell at 62. That's pretty low because the bogeyman at 62.80 is a support. It has not become a resistance yet. Okay, so you have to wait and see. But if you are selling at 62, it's coming back to your price. Once it passes the bogeyman, then you can see some profits coming up. Okay, but technically, by looking at the charts, technically I'm looking at a bullish gold. Okay, I hope that answers. Next, Oka. Hello, Oka. Welcome back. You need to respect hosts. If you wanna buy, just go buy. Hey man, look. Ladies and gentlemen, please. Let's make this clear. My job is to analyze the market to tell you where the support and resistance are. Your job is to plan your trade, then you trade your plan, right? If it makes sense to you, use it. If it doesn't make sense to you, don't. All right? Because I don't dictate your trades. You decide what to trade. I can show you my analysis, then it's your decision to plan your trade, then you trade your plan. All right? Anyway, thank you, Olga. Thanks for the comment. Good to have you back. Mr. PR. Timing, ladies and gentlemen. Yes, I agree with you, Mr. PR. Anyway, welcome back. Haven't seen you for a while. See, timing is everything. That is why my charts, I have leading and lagging indicators. With leading indicators, I can tell roughly when is the time the price going to be. So that's the beauty about having to use leading indicators. And by the way, leading indicators is the Fibonacci as well as the Fibo channels. All right. Mr. PR, Japanese yen very weak, sterling very strong. Yeah, because see, USD yen, dollar yen, is a reflection of the dollar index. So if the yen comes down, sterling goes up. If the sterling comes down, yen goes up. That's how it works. K Forex. Hey K Forex, welcome back. Good to have you back. What do you expect for Japanese yen for the next hours? Okay, let me do some revision of the Japanese yen. We got about 5 minutes to go. Looking at the daily chart, it is going south, and looking at the M30, it has bottom. So, but looking at M15, I usually use to enter the market. I use M1, 5, and 15, right? When I want to enter the market, and looking at M15, let's shift this. See if we can get a good timing. Yen might just pull back to this level at 139,379, and I expect the trend ribbon to hit this daily channel cross in about 15 plus 4, 9, 19, 7 o'clock. At about 7 o'clock. When prices hit here and it does not go further up, and I would say it's time to short yen. The dollar yen, this is the a good spot to sell yen at 139.39, and it might pull up. At the moment it's at the bottom, so if you want to sell at the bottom, it's not a good idea. The old adage say buy low, sell high. So you want to sell at a higher point. At the moment it's at a low point, so we don't sell at the low point. We wait until yen moves up here at 139.38. If it doesn't go beyond, you wait for about, say, by 7 o'clock it's there, by 7:15 it's still there, it's not going, then the candles or the trade setup shows itself that it's going to slide down, go ahead. It's good to sell yen. All right. I hope that answers your question, sir. Next, who do we have? Smith JT. Any live for CPI? Well, my live stream, my slot is always at the same time, which is 4 p.m. my time, 5 p.m. for GMT plus 8. CPI will be coming today, is it? Later. Hang on, take me check. CPI is tomorrow. Is it today? No. I think it's tomorrow. Hang on. My bad. Let me update my. Let's share this. Economic calendar. CPI tonight. So it could be interesting. New York opens, inflation numbers may appear, then we can. That is Tuesday, tomorrow. Today, not much. So today there's not much. There's no data. Like I said, today is going to be a technical play, right? So, and I don't think we are doing live for CPI, but my live slot is only daily at this time slot. Beyond that, I don't have that time slot, so we can't do the live for you. Sorry, Smith. Saya 1964.75 breaks down. Where sell not sure. 64.75 breaks down. Sell not sure. Are you referring to gold? Okay. One last shot. One last look at gold. All right. I got a few seconds left. Okay. 1964.75. Well, it's still consolidating, my dear. So I would say, if you want to, I'm not that keen in shorting gold, because all indicators are showing that it is bullish. So you can, well, I'm not keen on selling gold because it is bullish, right? So, well, that's my view. Anyway, so ladies and gentlemen, we have come to the end of the program, and thank you for attending. Please, if you enjoyed, hope you like what we are doing, you like my analysis, please give me the thumbs up. Please, you my friend, please give me the thumbs. Come on, my man, my ladies, please give me the thumbs. All right, and tell your friends about us. Get them to join in and spread the word. We always give good news. Bad news, I'll convert it into good news. because we can always take opportunities from the market. Price go up, price come down, still make money. Only OTC markets can do that, and only DCFX Asia will help you to do that. All right. So thank you for your time, all you wonderful and beautiful ladies and you handsome gentlemen. Have a pleasant evening ahead. I'll see you guys tomorrow. Time to go. Bye. Abe Layman signing off. God bless. See ya.